Bismillahirrahmanirrahim. Today we are going to solve Cambridge O-Level Accounting Paper 1 multiple choice question. We have the subject code 7707 and the variant of the paper is 12. For the session of May-June 2024, we have 1 hour 15 minutes for this paper. Okay. This paper is carrying 35 marks. Moving to question number 1. How does the trader use the information provided by the financial statement? Okay, traders being sole trader. Option A, to calculate the amount of cash drawing taken. No, this is not the purpose. To calculate the amount that is owned by trade receiver. Again, this is not the purpose for making a financial statement. To check the balance shown on the bank statement. No, you can check it by cash book. You don't need to make financial statement for it. To compare the business performance over a number of years. Yes, this is the right option. So option number D is the right one. Moving to question number 2. The balances remaining on the book of a business after the preparation of an income statement, including the following. Loan from XY Finance. So what was the total liabilities? Okay, we need to find the liability. We know that loan is the liability. So we're gonna take this amount 10,000. Wages due, it means we need to pay them, so it's also a liability. Rent prepaid is not a liability. Trade receivable again is not a liability. Trade payables are liabilities. Motor vehicles are assets, not a liability. Provision for depreciation for motor vehicles is again, it is not a liability. So we're gonna add those values to get the answer. It would be like that: 10,000 plus 620 plus 4650. You get the value after adding them equal to 15270. So our answer will be option number C, 15270. Moving to question number 3. Jami's financial year end on 31 December. On 1st January 2021, he bought down a debit balance on his stationery account. What does this balance represent? Okay. It means that a debit balance, it means that it have the inventory. Option number A, amount owing for stationery. Not amount paid for stationery. Again, this is the wrong option. Cost of stationery used during. No. Inventory of stationery. Yes, this is shown closing inventory and then it is moved to the next year's opening inventory. So option number D is the right answer. Moving to question number 4. Question number 4 is that Alex uses credit notes. What is a credit note? If you sell something and your customer have returned your good due to damage or any other excuse or faulty experience, then you give him a invoice that can be used to purchase that thing or any other thing in future use. So that is invoice is known as credit note. Okay, now we're gonna read the statement. Alex issued credit notes in August and entered them in the correct book of prime entry. How was the total of this book of prime entry recorded into the nominal ledger at the end of the August? So we know that option number A, credited to the purchase return account. No, it issued again, so it purchase account. It should represent only the sales return account. Now you need to identify whether it should be credited or debited. So we know that sales return account should be debited for issuing a credit note. So option number D is the right answer. Moving to question number 5. Question number 5 is that which business statement document are used for the sources of finance to make entries in the cash book? Okay, this is a very famous question. Its answer is C. First you need to make bank statement, then you need to check counterfoil, then paying in the slip, and then receipts. So this order is the right one. So option number C is carrying that order. Moving to question number 6. What is the double entry for recording a check payment to a credit supplier? Okay, double entry for recording a check payment to a credit supplier. It means that we purchase ledger account should be debited and our bank account should be credit. So the bank account credit is the and purchase ledger. So option number C is carrying both these options. This was a simple double entry question. Moving to question number 7, that is a bookkeeper made 2 errors which cancel each other. Okay, which type of error did he make? Compensating error. Yes, compensating error are those that cancel each other's effects, so they are hard to identify. So option number A is the right one. Moving to question number 8, the total book of a trial balance did not agree and 200 was debited to the suspense account. This is a very interesting question. The bookkeeper then checked the books and he found that the following 2 errors. Okay, a sale invoice of 700 has been recorded in the sales journal ledger. So the difference of error will be 770 minus 70. 700, that would be equal to $70. The sales journal had been totaled incorrectly. We already know that it was incorrectly added 200. So 200 minus 70, it should be 130. Then adding 130 plus 70, we get the answer, that is 200. So option number B is carrying. It is overcost by 200. Okay. Moving to question number 9, a trader took some goods from the business for his own use. He credited the purchases account with the cost price of the goods, that is amount to 200, and credited the sales account with the selling price 300. Which entry did he make to correct the entry? Okay, first we need to read the statement again. A trader took some goods from the business for his own use. It means this is for the purpose of drawing, and he credited the purchase account with the cost price of goods of 200 and credited the sales. So it should be drawing that he made, and drawing that is made is of the amount, we know that, of 200. So option number A and B are showing the drawing of debit balance of 200. Now the incomes, what would be the effect of income statement? If it has credited that the sales account and with the selling price of 300, so income statement should be debited by 300 because it's not a sale, and overall suspense account should tally the credit entry of amount 500. So 200 plus 300, it would be 500. So option number B is the right answer. Moving to question number 10, what would result in the cash book balance being lower than the bank statement balance? If cash book balance is lower, then it means that it could be due to any reason. First we need to know option number A, a check received from a customer was not recorded in the bank statement. If it is not recorded in the bank statement, it should the cash book should be higher, so it's not the right option. Moving to B option, a customer check dishonored by the bank, again it should rise, not the lower level. Payment by a customer directly into the bank was not recorded in the cash book. This is the valid reason. Sometimes it happen, bank received the payments, bank received the checks, but you didn't cross your entry in the, you didn't put your entry in the cash book, so that's why cash statements are understated or lower than the bank statements. So option number C is carrying that option. Moving to question number 11. Question number 11 is very interesting question. The bank statement of business showed a credit balance of 280. At that day there were unpresented check of 212, so 280, and the unpresented check, that is 312. So you're gonna subtract them. A standing order of 20 has been incorrectly entered as 22, so their balance should be minus 20 or 22 minus 20. So $2 should be added to correct these values. After adding this value, we get the value of $30 and it should be credited. So option number A is the right choice. Moving to question number 12. Question number 12 is that a business keeps a complete set of book of accounts, okay, which is not used as a source of information for making entries in the control account. Cash book is used So examiner have which is not used. Journal is also used. Purchase journal is also used. Sales journals are not used. Sales journals are used, but sales journal ledgers are not used. So option number D is the right choice according to the given circumstances. Moving to question number 13, which item would not appear in the purchase ledger control account? So we know that contra entry can be entered, discount receipt can be appeared, interest charge can be appeared, but return invoice cannot be shown in the purchase ledger control account. So that's why option number D are the it can carry return outward but not return inward. Okay, the question number 14, the cost of the repair of the machinery was debited to the machinery account. What was the effect of this error? The effect of this error is it would overstate the non-current asset, because cost of machinery repairs should not be added in the value of the machine, so our non-current asset would be overstated, and profit of the year would also be overstated. So option number A is carrying both these options. So option number A is the right choice. Moving to question number 15, Elsevier purchased a motor vehicle costing 8,000 on 1 January 2018. It is depreciated at 40% on the reducing balance basis. Okay, which journal entry record the depreciation for the year ended 31 December 2009? First we need to calculate for the first year, and reducing balance method is used. 8,000 multiplied by 40% means 0.4. You get the value that is equal to 4,800. Now the remaining value would be 8,000 minus 4,800. You get the value that is equal to 3,200. Now you need to calculate the depreciation charge for the next year. Okay, 8,000 multiplied by 40%, it should be 3,200, not 4,800, and 8,000 it should be 3,200, and this value should be equal to 4,800. Okay, now you need to take the depreciation upon 4,800. 4,800 multiplied by 0.4, you get the value that is equal to 1920. So this would be the value, and income statement should be debited by 1920, and provision for the depreciation of motor vehicle should be credited by 1920. So option number A is carrying. I am repeating this question. First you need to take the 40% of 8,000, that is 3,200, then subtract this value to get the value, net book value of the next year. You get the value of 4,800, then apply this 4,800 to 0.4% to calculate the depreciation of the current year. You get the value of 1920. Okay, moving to question number 16. A trader sold one of his vehicle. What is the journal entry to remove the total depreciation of the vehicle sold? Okay, we know that disposal account should carry the provision for depreciation of motor vehicle, that is accumulated depreciation, and that should be debited, and disposal of the motor vehicle should be credited. So option number D is carrying those options. So option number D is the right choice. Moving to question number 17, why is it important to match cost and revenue? It is important to match to enable a better comparison from the profit from the year to year. So option number C is the right. Option number A, so that every debit entry has a cross point. No, it should be for the trial balance only, so that business does not incur any losses. No. Okay, option C is the only right option. Moving to question number 18, Devendra prepared the following journal entry: in recoverable debts of 714. Tobias has a credit balance of 714. Which statement is correct? Okay, Devendra has provided a doubtful debt owed by Tobias. No. Devendra has received the amount. No, it's an irrecoverable debt. So how could it receive? Tobias cannot pay the amount. Yes, this is the right reason for irrecoverable debts. Okay, option number D is also wrong. To buy a spade, no. So option number C is the right one. Moving to question number 19. Question number 19 is that Alex purchased good costing $1,000. She planned to resell the goods at a markup of rate of 25%. These goods were unsold at the year end and were found to be damaged. Alex estimated that they could be sold for 600. What value should be shown for these goods in the year end of the financial statement? Okay, so we have to take the value that is lower NRV, we should apply IS2 concept, and we should take the value that is less than the cost or net realizable value. So if we know that the cost is 600, and what would be the NRV? 1000 multiplied by 25 by 100, you get the value that is 250, and then adding 1000 plus 250, it would be 1250. And now you need to identify which value is lower, so you could chart them in your books. So option number 600 is lower compared to 1250, so option number B is the correct answer according to NRV. Moving to question number 20. Unlimited liability is one of the disadvantages of operating as a sole trader. What is the correct explanation of unlimited liability? A sole trader cannot take a bank loan. No. A sole trader has to manage their business alone. Again, this is wrong. A sole trader cannot use their private funds to repay. Again, this is wrong. A sole trader may lose both their business and personal because it has the unlimited liability. That's why option number D is the right answer. Moving to 21. Which item is a current asset? This is a very easy. Bank overdraft is a current liability. Loan repayable in 12 months. This is a current liability. Prepaid income that is not a current asset. And work in progress, this is the current asset. So option number D is the right answer. Moving to question number 22. Where is the interest on the drawing entered on the accounting record of a partnership business? We know that adjusting entry helps to into the end of the year. So we're gonna read the option. A preparation account should be credited. So option B and D, any can be true. Partners capital account is not affected by it, so no entry. Partners current account should be debited, so option number B is carrying all those ticks. Moving to question number 23. 23 is that T Limited was formed on 1 April 2019. A total of 220,000 shares of $2 each were issued, and shareholders were asked to pay 75% of the share value immediately and 25% of 1 April 2020. By 1 June 2019, holders of 190,000 shares had been paid the amount due. What was the capital on 1 June 2019? First, you need to calculate the share value, that is equal to 2, and 75% you need to pay 75 by 100. So we get the value that is 1.5. So you need to pay immediately $1.5. So we have sold 190,000 shareholders have paid this amount 1.5. You can calculate it after multiplying 28500. So option number A is carrying that option. So this was an easy question but very interesting question. Moving to question number 24. Which items would appear in the statement of changes of equity of X Limited for the year ended 30 June 2020. Okay, so interim dividend paid, yes, this is shown on the changes in equity statement. Proposed dividend, no, this can be shown in the future statement but not in over here. Proposed final dividend, yes, this is also shown. Transfer to general reserves on 30 June 2020, this is also shown. So option number 1 3 and 4 are the right one. Moving to question number 25. A company's financial year end on 31 March. On 31 March 2021, trade receivables were 45,000. On 31 March 2022, trade receivables were 41,000. Okay. An irrecoverable debt of $1,000 is yet to be written off at 31 March 2022. The provision for the doubtful debt is maintained at 5%. What is the effect of this irrecoverable debt and the adjustment to the provision for doubtful debts on the profit for the year ended 31 March 2022? So this is a very interesting question. First, you need to identify 45,000 multiply by 5%, you get the value of last year, that is 2250. Now for this year, 41,000 subtracted from 1,000, because 1,000 is a irrecoverable debt, so you're gonna subtract it 40,000, and now take 5% of 40,000, you get the value that is equal to 2,000. So we know that over the difference between those values, 2250 minus 2,000, that is equal to 250, and we know that 1,000 is also charged, so 1,000 minus 250, so over that profit for the year end should be decreased by 750. So this is the right option, option number A. Hopefully you have the idea. First you calculate the first year irrecoverable debt amount 2250, and then subtract from 1,000 irrecoverable debt, then take the 40,000, 5% of 40,000 for this year, then the difference of get you value the 250, and after subtracting 1,000 from 250 you get the value of 750. Okay, moving to question number 26. This is also a calculation question. A club received subscription from member totaling 12,600 in the year ended 30 April 2019. The following information was available. Subscription paid in advance. So this is the value 12,600. You must add the subscription that is paid in advance, and you should subtract the subscription in arrears, that is 800, and for the year ended these amounts should be added 1100. After calculating this value you get the answer $14,200. So option number D is carrying that option, that's why option number D is the right answer. Moving to question number 27. 27 is that which statement about the accumulated fund of society are correct? First one is a surplus will increase the accumulated fund and deficit will reduce it. It includes all the monies received and paid during the year. So option number, okay, this is the right option, this is the wrong. Members cannot make drawings from the yes, members cannot make drawings. The accumulated fund is shown as an asset in the statement of financial position. No. So option number B is the right choice over here, 1 and 3. Moving to question number 28. Again this is a calculative question. A manufacturing company provided the following information: cost of raw material, direct wages, machinery depreciation, factory supervisor salary, factory rent, machinery repairs. What was the primary cost of manufacturing? Okay, we can't find the primary cost of the manufacturing. We know that cost of raw material and the direct wages should be added. After adding these values, because all those are not direct costs, after adding these values you get the value that is equal to 61,000. So option number B is carrying that option. So option number B is the right one. Moving to question number 29. Sans work in progress was 6,500 at the start of the year and 11,200 at the end of the year. When Sam prepared his manufacturing account, he forgot to make adjustment for the work in progress. Okay. How did the omission affect the cost of production? So Sam work in progress was 6,500 at the start and 1,100 at the end of. In the manufacturing, he forgot to adjustment for the work in. So what would be the result of it? The result of it would be the cost of production would be overstated and gross profit would be understated. So option number B is the right choice. Moving to question number 30, Roshan says for the first year of trading were 55,000, his gross profit margin was 20%, the closing inventory was 3,200. What were the purchases for the year? Okay, you can calculate them. 55,000 and his gross margin is 20%, so 100 minus 20%, you can get the value 80%. So 80 by 100, you get the value of cost, that would be equal to 44,000, and you already know that the closing inventory was 3,200, so you're gonna add 3,200 in it, so you get the value 47,200. So option number D is carrying that option. Again, this was a calculative part. Moving to question number 31. 31 is that Medium does not maintain a full set of accounting records. Only the purchases for the year and the asset and the liabilities for the year and are known. Which financial statement can be prepared using the information? Income statement cannot be prepared, so option number C and D are the right. Statement of fair, yes, statement of fair you can make, so option number C is carrying 2 ticks, so option number C is the right choice over here. Moving to question number 32, Abhinav provided the following information. Okay, okay, purchases were 1,20,000 and cost of sale for the year ended and for the next year ended are also given. Inventory at the start of the month and at the end of the month and for the next year is also given. What the rate of inventory for the year ended? Rate of inventory turnover for the year ended 31 December 2020. Okay, so we know that inventory turnover has a formula. Inventory turnover has a formula of cost of sale divided by average inventory. So you need to find the average inventory first, and the average inventory is equal to 4,000 plus 8,000 opening plus closing divided by 2. You get the value that is equal to 6,000. So this is the amount of average inventory. Now you're gonna divide it by this one to get the inventory turnover. Inventory turnover would be like that. Cost of sale has the value of 1,20,000 and inventory has 6,000 average inventory. After dividing it, you get the value that is 20 times. So turnover is always in time, so option number B is carrying that option. Okay, moving to question number 33. Miranda's gross margin fell from 25% in year 1 to 15% in year 2. What may cause this? Okay, Miranda paid less for her purchases in the year 2. No. Miranda purchased fewer goods in the year 2. No. Miranda reduced her selling price. Yes, that's why her margin become less. So option number C is the right answer. Moving to question number 34. Ralph wants to compare the accounting ratios for the business with the accounting ratio of his brother's business. What would prevent Ralph from making a meaningful comparison? The business buy from different supplier? No. The business have different selling price? No. The business present their ledger account differently? No, the business use different accounting policies. Yeah, this is the right choice. Moving to question number 35, that is the last MCQs of this paper. Which statement correctly describe the principle of realization? Profit is earned when a check is received from a customer in payment for goods supplied. No, this is not principle of realization. Profit is earned when a check is received from a customer is paid into the business bank account. Profit is earned when the option number B is also wrong. Profit is earned when the goods are supplied and ownership pass. Yes, this is the right choice because ownership passes to the customer. So option number C is the right choice. Option number D, profit is earned when the customer places an order. No, customer may cancel the order, so no profits are made. So option number C is the right choice. Hopefully you have the understanding of this paper. If you still have the queries related to this paper, you can ask in the comment section. I will reply ASAP. And do not forget to subscribe this channel. Also share this channel with your friends and community, which would help us to grow. Thank you so much for watching this video. Allah Hafiz.